Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Welcome. This is Darrin T. Mish, your IRS Solution Attorney.
And I'm your co-host. Welcome to the show. I'm Katrina Madewell. Thanks for joining us today.
How you doing?
Doing great.
Me too. It's
Can't
kind
complain.
of gloomy outside, so we have to be the sunshine inside.
It's St. Patty's Day, and you forgot your green. That's what I'm pinching you.
Ouch. I just, she literally just pinched me.
Yes, she did.
And it hurt,
I just
too.
noticed that. Charlie had green. You had green. He didn't get the memo.
Well, I kind of have a limited closet right now.
Yes, you do. So our topic for today is 5 tax tips for millennials. And if you would like to call in and ask a question, like if you owe the IRS money or you got a letter or something funky, you can call it 888-404-1010. 888-404-1010.
What's that number?
888-404-1010. Save it in your phone.
So I thought I'd do this show today about tax tips for millennials because,
Yeah, why millennials?
a lot of the time we just focus on, the older folks who have more money and who have bigger tax problems. But, younger people can have tax problems too. And although they seem to be a little bit rarer when they come in because their problems tend to be smaller. But my big question is...
Maybe their tax debt just hasn't seasoned yet.
And I certainly wasn't saying the people
that.
were smaller, but that because their income tends to be stereotypically smaller.
Well, because your average client is, 10 years not filing or more before they can see you?
And they tend to be, 40 years older. It kind of takes a while to screw up your life good and properly. Spoken by somebody who's done it a couple times. But one of my questions, and I'm going to ask you because I don't know, and I guess I could ask Google, but what age range are millennials? I just know it's like a hip sort of term.
All I know is they're younger than me. Do you know what age they are, Pat?
Yeah, I think they're 24-ish.
I mean, you have
24-ish.
Gen X, Gen Y, and all these other age brackets.
Yeah, between 25 and 30, millennials.
Okay, I just looked it up, and it says a person reaching young adulthood around the year 2000.
Yeah, my daughter was born in 2000.
So that could be
So she's, I thought she was considered a millennial, but I guess not.
So I think it's a little older, Pat, like 30 to 35.
Well, if they were born in 1980, yeah,
something like that. Anyway, it's for people who are younger than us.
Spelling.
Younger than all three of us, actually.
Unfortunately, you're right about that.
So the first tip is going to be, make sure you're filing all your returns and schedules like you're supposed to. It's very common.
Actually, I have a technical answer for that. I'm a little slow.
For millennials?
But, yeah. So it says 1987, they coined the term around 82 born children were entering preschool in the media when they first identified their perspective linked to the millennial year 2000. So 1982 to 2004. Does that sound right? That's what it says.
Yes.
Okay, sure. So
And the new one's Generation X. That's the new one.
See, my daughter's a tail end of the millennials. She was born in 2000.
okay, so it could be anywhere from 34 to age 12.
Yeah.
Okay, fascinating.
Well, not 12. She's almost 16.
The 12-year-olds don't have a lot of tax
Close.
problems, so lucky for them.
None
Although
yet.
they do owe a lot of debt already.
It's funny, though, because you hear all the time about these kids that create apps, they create companies, and they're
Yeah, my son, who's almost 14, he's in 8th grade, he would like to just quit school now and just, go for it. And
tell them as soon as you can make enough money to go for it, then you might have that option.
well, he's busy, studying language arts and Spanish and math and things like that.
Stuff that they don't think is important. We have that argument in my house regularly.
I'm not thoroughly convinced anymore that stuff is all that important, but, there's a law about graduating. I guess you don't have to graduate from
according
high
to
school.
the plumber a couple weeks ago, right, Pat? You have to know trig, so.
Apparently.
Just to be a plumber.
That's an advanced job now. A lot of people have to get knocked out of that if they were bad.
I had no idea you had to
college
know
in
trig
math
to be a plumber.
Trigonometry.
Isn't there an app for that?
Probably.
We're going to talk about apps in a minute here. There's apps for almost everything else. I can remember taking algebra, and I had to take it more than once when I was a kid because it didn't quite stick because I thought it was really boring. But I can remember back then thinking, if I need this stuff when I grow up, if I take a job like that, I'm just going to hire somebody who can do this. That's always.
I can hear your son saying that.
That's been like 40 years ago. That was my attitude, and it remains. I can hire somebody in Bangladesh to do that algebra for like $3.
Yeah, and now there's just an app for
Yeah,
that.
exactly. You carry it around in your pocket.
So the first tip for millennials is to make sure you're filing all your tax returns and your schedules you're supposed to be sending. Taxes are more complex than ever, so it's easy to do it if you're not careful. So let's elaborate on that.
Give you an example. So let's say you get a 1099. So you're technically self-employed. You're an independent contractor. That's the phrase that we use. And so you're supposed to file a Schedule C. I mean, everybody knows that. You're supposed to file the Schedule C. That's where the gross income goes, and then you take your business deductions off of the Schedule C. But occasionally, you'll see people forget their Schedule SE. SE stands for self-employed. And the SE, the Schedule SE, is sort of evil because what it does is it calculates your self-employment tax, which is 15.3% off the top. Not off the top of your gross.
It's a high bracket for somebody that doesn't even look at themselves as being self-employed.
Yeah, pretty routinely I see people and they say, well, I'm not making much money. I'm not going to owe that much tax when I file this tax return. And you go, well, you might be surprised. If you only had $10,000 net income from your self-employment activity, you're looking at, you may not have much income tax at all, but you're going to owe self-employment tax of at least $1,500. So it's just something to be.
What other things like that have you seen with millennials? Because we talk about that, right? The kid like you that had a job putting out signs and you got a 1099. What other instances can you think of?
Well, we're going to get to some more that have to do with selling things on the internet.
Good point.
Before, in the 90s, I mean, I'm dating myself, right? In the 90s, after the internet was really new and these sites like eBay and PayPal and things were really new. I mean, there was no mechanism. The IRS had no mechanism to trace that income. But now these sites are, especially PayPal are issuing 1099s because PayPal's a bank. We don't really think of PayPal as being a bank, but they are a bank. And so you want to make sure that you.
I guess they have to be classified as something, so that would make sense.
Mm-hmm. So you're going to want to make sure that you go ahead and report your income for things that you sell on eBay or Craigslist or those types of things. Craigslist, as far as I know, doesn't issue 1099s because that's really just a site to connect people. But eBay definitely does. In fact, I'm handling an audit right now where the gentleman, what he does is he just has a knack for the value of old car parts. So he'll go to junkyards and he'll pull parts off of vehicles that he knows that he can make, a buck on. And then he'll go ahead and put them on eBay and then he'll ship them. And he focuses on things that are smaller, that you can ship. And he wins sometimes and he loses sometimes. And so in this gentleman's particular instance, it's going to be really important that he keep track of his basis. And we talk about that sometimes on the show. The basis for this gentleman would be if he buys, a car widget for $10 and sells it for $20, then he's going to pay tax on the profit of $10. So the problem that he had was he didn't keep any of the purchase records. So he had no basis. So he just figured he'd just leave it off the tax return. Well, when that 1099 came into the IRS from eBay, then, the computer at the IRS matched up. There was no matching,
Never would have thought about that. I had no idea you got 1099s from eBay.
Yes.
But I don't sell anything on eBay.
Yeah. And if he had bought car parts, let's say he just had like a pile of old junk cars out back that he had paid for those cars with after-tax income, and he was just like parting them out, then he wouldn't actually owe tax because he would have basis in them, and he wouldn't be recovering the entire
eBay
basis.
was originally supposed to be an auction site.
Mm-hmm.
So how did they get into sending out 1099?
Well, eBay is more like it is an auction site, but it's almost more like a marketplace site like Amazon now.
Right. It's become that way.
Mm-hmm. Because there's so many eBay, power sellers and whatnot.
Now, if you sell like that, can you deduct the packaging and things like that from the taxes? You put car parts in boxes?
Why couldn't you? It's an expense.
Certainly.
It's a
So
real expense.
that was one of the things that we had to help him, calculate was what the cost of the shipping was and what the cost of all the packing material and whatnot. And it did turn out that he didn't have much income after all from that activity, but the IRS sure thought that he did. So
we have to justify everything, I guess, right? Like at the end of the day, he probably didn't make much at all, but that's not what the paper said.
I think the key is to just, when you're going to go off in business, you're going to want to make sure you set up some system for keeping track of your expenses and your profit and your revenues. Because what often happens is we go into business because we're good at a particular thing. And then things start to, as you become more successful, things start to get out of hand. You get busier and busier. And then if you have no system at all, then you're going to create problems for yourself
Even
down
just
the road.
a separate bank account that a bookkeeper could come in and keep track of all that would be extremely helpful.
I'm nodding, vigorously here. Yeah, of course, a separate bank account is important. You're going to want to make sure you have a business account and a separate personal account. Very often you see commingling, and that just causes headaches and problems down the road for the accountant or the bookkeeper.
Well, you're listening to the IRS Solution Attorney Show with Darrin T. Mish. I'm your co-host, Katrina Madewell. We'll be back in a couple minutes. If you'd like to call in, we will answer your tax questions live. 888-404-1010, 888-404-1010. Today's show is 5 tax tips for millennials. Back in a minute. Welcome back. You're listening to the IRS Solution Attorney Show with Darrin T. Mish. I'm your co-host, Katrina Madewell. Thanks for sticking around.
Yeah, we're talking about 5 tax tips for millennials today. Just talking about ways that people can avoid problems in the future coming up and to make sure that they get the maximum refunds that they're entitled to.
And if you or someone you know has received an IRS letter, feel free to call the show because we are here live. 888-404-1010, and Darrin would love to answer your question. 888-404-1010.
I live for questions. It's not like I answer questions all day long at the office, but yes, I absolutely would love it if you would call in and we could answer your questions that are just plaguing you with regards to taxes and the IRS today.
We were talking about how much fun it is for the show to go sideways as opposed to the agenda.
Yeah, it's a lot more fun to just kind of talk about things that come up as, spontaneously than, stick to the program and stick to the outline that we have here today. But the next point I wanted to make was to go ahead and use technology when it makes sense. And I don't know if that statement even makes sense without a little bit of elaboration.
I don't think it does.
There's some really cool, well, let me talk about this first. If you earn less than $62,000 a year, the IRS actually provides Free File, which is a program where you can electronically file your tax returns for free.
Wow.
So that's kind of cool. It's not that great for tax preparers, I don't think.
I would imagine if the IRS prepared it, it might not be in your favor, but I didn't know they had it.
Well, do you remember filing a 1040 EZ back in the day? Probably when you were 15 or 16 or something like that. Yeah, I think the program is primarily aimed at those folks. If you have a 1040 EZ type situation, which means you're a wage earner, you're not married, no kids, earn under $62,000 a year, there's not a lot to, calculating your taxes or generating a tax return. And so I think that's why this Free File program from the IRS is available. It's really for those folks. And it's not really fair to ask those people to pay really anything to do their taxes because it is literally, what's your income on your W-2, how much tax was withheld, simple math, and it's done. So I would assume that would go pretty fast too. Yeah. Absolutely.
I had a question about the new healthcare deal. Apparently, I've been told or I've heard that if you've bought health insurance, it's going to save you some money on your taxes this year. You can deduct that stuff.
Well, health insurance is not usually deductible.
Well, yes and no. I mean, we've talked about on the show many times how the Obamacare penalty, which is called the shared responsibility payment, which I absolutely love because it sounds like something out of
IRS
George
child
Orwell's
support or something.
Yeah, it sounds like something out of George Orwell's 1984. This is your shared responsibility payment, which is really just a penalty. But if you're employed and you're paying for health insurance, no, it's not deductible. Is your wife self-employed by any chance?
Yes.
Okay, well that makes that's a whole different ballgame.
Two different scenarios,
exactly.
Right? Entirely.
Health insurance premiums for self-employed people can be deductible. Not always, but they can be deductible. And so that could save you some money on your taxes. And I think that's actually good, government policy because if as a society we're trying to encourage people to get healthcare coverage so that, society doesn't have to pay for it when you get sick, I think that it does make sense to make those, those payments deductible. And they are a legitimate business expense in my mind.
Yeah, and how much of that is deductible? 70, 60, 100?
No, up to 100%.
Wow.
So another thing about, going along
Yeah, because they sock it to you if you're self-employed buying health insurance.
Well, for sure. I can remember when we first started my law practice. I mean, this is years ago, probably close to 20 years ago. We went out searching on the marketplace for health care for a family of 4, and the premiums were over $1,000 a month, 15, 20 years ago. And I can remember just kind of hollering at my wife, not really at her, but just about the situation, saying, who in the world can afford that? And now I think it's fairly common for health insurance premiums to be $1,000
I mean, that
a
long
month.
ago, that was probably more than a lot of people's mortgage payment.
Oh, for sure. And so, when you're young and in good health, it's tempting not to go with health insurance. It is really tempting. But in my practice, I've seen many people where we encourage them to get health insurance for tax problem resolution reasons, because it's a deductible, allowable expense on a monthly basis. And I've had at least 2 people did not have health care for many years. We encouraged them to get the health care for offer and compromise purposes so we can make a better deal with the IRS. And subsequently, they came down with, a life-threating illness, and it saved their life. And so
they had like cancer or something crazy. Oh my gosh.
Yeah, it gives you goosebumps just thinking. I mean, maybe that's why they had the tax problem in the first place. So that they would be directed in so that we would encourage them to get health care. And they did not pass away. So I think that's kind of an interesting, cool story.
I think that's awesome.
Yeah.
I mean, really, that's wow.
Yeah, you're never happy to hear that somebody came down ill after you come into contact with them.
Yeah, but if they didn't have health insurance all that time and then they did?
Absolutely. So another thing I wanted to talk about with regard to technology is I see this all the time, particularly with self-employed people, is that they have no effective way to keep track of their mileage. And so they just spitball it at the end of the year and they just guess. And if you're audited, and that's going to be one of the biggest, issues, is how did you derive this mileage figure? And so there's a couple cool apps that I know of for your smartphone, both Android and
because for people
iPhone.
Like me, like real estate agents, that is a pain in the what. Like, do you know how many times we have our schedule set and then it just gets sideways? Like Echo will call and go, "Hey, by the way, we're adding in the property for so and so," and then the next thing you know, there's 4 more on top of it. And, it's 100 more miles away, something like that.
Absolutely, and the law says that you have to have a contemporaneous mileage log. That means you're supposed to be keeping track as you go. You're not supposed to be going back and recreating your mileage log. And so one of the coolest apps for this is actually called Mile IQ. It's a little bit on the pricey side. It's about $59.99 a year, I think. But this app is so cool. What it does is it can sense every time you're in the car. And I think that's by speed, right? I mean, you can't walk 20 miles an hour. And so it knows if you're going over a certain speed that you must be in a car. And what it does is it tracks every single trip that you take in a car. And then at the end of the day or the week or the month even, you just swipe left or right. You can see, you can see all of the trips and you're just like, okay, this one is from home to the office. That's personal because it's not deductible. We've talked about commuting mileage is not deductible in the past. So, but then, when you went from the office to go show a house, for example, then that would be definitely mileage, business mileage, and it adds up really, really fast. And so that's a really cool app. But there's a couple other ones. There's one called Tax Mileage. There's one called Mile Bug, Track My Drive. There's a few. And I think that since we're all, walking around with these smartphones in our pockets or our purses or whatever, then we want to go ahead and make sure that we utilize that technology and maximize our tax refunds.
We have a call from T. Can we take that? Welcome to the show.
Hey, T.
Hey, how you doing today?
Good. How are you?
I got a quick tax question. I say about 2 years ago, I had a car loan with Chase, and I gave the car back and everything. So after I gave the car back, when I first bought the car, I paid the taxes on the car. Then after that, 2 years later, Chase, I get some information from the IRS saying I owe taxes on this car that I gave back to Chase after they sold the car. Is that legal?
I'm going to go ahead and try and fill in.
You had a car, probably gave it back as a voluntary repossession, and then they sold it at auction, and then you got an IRS letter?
Yeah, saying that I owe $8,000 on that.
I'm going to fill in some blanks here. I think probably what you got was a 1099-C for cancellation of debt. Does that sound right?
I believe so, yes.
Okay, so they canceled some, it sounds like if you had an $8,000 tax bill, they canceled some significant, debt, maybe, I don't know, $20,000 or $30,000. And then, so you're supposed, the theory is that since that debt was canceled, you got the benefit of that money like it had run through your bank account. And so Congress wants you to pay taxes on it. I mean, that's the theory.
That's how the IRS is thinking, which doesn't make sense.
But there's a pretty big exception to that rule. And that is if you were insolvent at the time of the cancellation of the debt, then you don't actually have to pay taxes on the cancellation of debt.
So explain what insolvent means.
Okay. Insolvent means at the time of the cancellation in debt, you had more liabilities, you had more bills than you had assets, which is stuff. Okay.
Income.
And so most people, this happens, the most common scenario that we see this is in homes. Okay. People figure they're upside down in a house, and so they walk, and then they get a big 1099-C at the end of the year for a cancellation of debt.
Yeah.
You know, I've never heard of one in a car situation, but it makes perfect sense. So the way you're going to want to...
Well, Chase is notorious for pursuing bad debt. We see it all the time.
Okay. Go ahead, T.
What bothered me is because, when I first brought the car, I paid the taxes in the beginning. I was just wondering, how can they come back after me after I voluntarily, gave the car back?
Different kind of taxes. When you buy a car, you're paying sales tax. And when you got the 1099, that was theoretically on
bad
income
debt.
tax because you had bad debt that was forgiven. What tax year was that for, T?
I think that was probably about 2013.
Okay, you still have time to go back. You can amend that tax return. You got to look up Form 982, file an amended return, and you can.
Here's the deal. I already agreed to start. I'm already paying taxes on it now. I'm already set up a payment with IRS and everything. I was wondering, can I go back and
Yes.
I tell you what, T, hold on just a second. We'll actually continue your question. We have to take a hard break at the bottom of the hour. You're listening to the IRS Solution Attorney Show with the Mr. Attorney Darrin T. Mish. I'm your co-host, Katrina Madewell, just keeping the show and the conversation moving along. We'll be back in just a minute. Hang tight.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
You're listening to the IRS Solution Attorney Show. Thanks so much for sticking with us through the break. We have T on the line. He actually called in, so I'm going to recap his question. He got an IRS cancellation of debt or 1099-C because he had a car. He gave it back to Chase. Chase basically resold it for less, and they sent him a 1099 bill. And he said that he paid taxes on it already, but he was talking about the sales tax. Is that right?
Yeah, that's what I'm thinking you're saying, T. So,
all right, so pick up your question, backtrack just a little bit, T, where we left off.
So back to what I was saying is, like I said, I got the bill, and then saying that I owe $8,000. I mean, since I went ahead and agreed to it.
And you already started a payment plan, didn't you say that?
I'm already starting the payment plan. Can I go back to the table with IRS and say, try to amend that or something, or it's too late since I've agreed to it?
No, you actually can go back and amend that. So if it was
amend
a 2000,
return,
you can amend the
right?
return. So if it was a 2013 tax return, you still have 3 years to amend. So a 2013 return was due April 15th of 2014, and so we still have time. So you're going to want to go ahead and download Form 1040X, okay? And basically that's an amended tax return form, and what you do is you show the old return, the new return, and the changes that you want to make. And so the change is going to be to just take off the cancellation of debt. This might be a little bit above your ability, So any tax preparer can do this, or you could call our office at 888-GET-MISH. That's 888-GET-MISH. 888-438-6474. You could call our office and we could help you with that. And you're going to want to add a Form 982. You're just going to have to look it up and download it. You're going to.
Is it a 982C? Or no?
I don't think so. It's a 982, and you're going to check the box that says I was insolvent at the time of the cancellation of debt. And there's a worksheet that you don't have to file, but we've noticed in the last year or so that in a situation like yours, the IRS is going to want to see the worksheet. Okay, so they're going to want to see all of your assets, all of your liabilities, and they're going to want to see, they were going to want to see the proof that you were insolvent, that you were broke. But people don't usually give up stuff unless you're broke.
Here's
right?
the thing. You get this
Correct.
big, hairy, scary letter from the IRS saying you owe $8,000. That's enough to scare the daylights out of anybody.
And it
So,
just
of
kind of
course,
threw me off all in the loop and everything. So I
Yeah.
didn't know what to do. So that's the reason why I want to call the show today.
and I'm sure they
See
didn't
what I
tell
can
you.
get help from.
They
Yeah.
didn't tell you about
So
the
nobody told me
982
at all.
form.
Okay, well, I sure appreciate it for answering that question for me.
Thanks, T.
So, did you have more to add to that, Darrin?
No, that's about it.
Okay.
I mean, you just have to go through the program and go through this process, and you're going to file that form. And I would encourage you, if you want to be protected from levies and garnishments and liens and bad stuff, go ahead and just keep making the payments that you've agreed to, and then
Okay.
the amended return is going to be processed in somewhere between 6 to 12 months. And then it'll just zero it out. I just handled a case that was similar. I mean, it's slightly different facts, but a cancellation of debt issue, and it took me 14 months to get it wiped out. But it was pretty cool because the lady owed $29,000, and we wiped it out to about 2 or 3.
Were they making payments the whole time or not after you filed the amendment?
Well, she was my client, so no, she wasn't making payments. But
So you're going to have to call Darrin at 888-GET-MISH, like fish.
So what I do,
but
I just probably get with your company and we'll sit down behind scenes and we just go from there. Okay.
yeah, we can try. Probably figure something out.
Thanks for the call
Okay.
today, T. Great
All
call.
right,
Great
appreciate it.
question.
You have a good day.
All right, you too. Take care. So where were we? We were talking about technology and apps and different ways to keep track of your business expenses.
And using it when it makes sense.
Yeah, using it when it makes sense. And, we talked about Mile IQ is a really cool app that tracks your mileage on your smartphone.
And reporting income from the stuff you sell.
Yeah.
Craigslist, eBay.
I made the comment that the app was kind of on the pricey side. It was $59.99, I think. But guess what? That's tax deductible.
There you go.
And so you're going to want to make sure you keep track of that as well.
See, and a good tax repair will remind you of all that stuff.
This is true. And then there's another service that you and I have talked about on the show before called shoebox.com.
I love Shoebox.
And this is just absolutely.
That was a kid, by the way, that created that company.
Is it? It makes sense.
was, yeah.
I mean, it figures, right? So Shoebox is really cool for those, those people that they're a good baker, so they open a bakery, or they're a good plumber, so they open a plumbing company. Shoebox is a service where literally, usually you keep if you're that kind of an entrepreneur, sort of small, you keep all your receipts in a shoebox. So what you do is they have envelopes. I think they're blue envelopes.
Yep,
and you
they're
don't
blue.
even,
I put mine in the metal box, then they go in the blue envelope, then they go to the bookkeeper, and then she mails them off.
Yeah, so all you have to do is take all of these, receipts that have been banging around in the truck, for a
Anything.
while, and you just go ahead and put them in the blue envelope. You drop it in the mailbox, and they put it all in some system, and it comes back to you in some organized fashion.
We're so paperless now that literally you can put everything in there. So, like, if you got correspondence or a letter or something that you wanted to keep, like, for example, we're getting an assessment to have our roads repaved. Mm-hmm. So I didn't really want to keep that paper hanging around, but I wanted to keep it. So I stuffed it in my shoebox envelope. Business cards, scans, all kinds of stuff.
So you're kind of using Shoebox almost like someone else would use Evernote or Dropbox or some other, cloud storage.
Yeah, and I
sort of
do use
solution.
both of those, but this is like,
Okay.
it's searchable. You can just search for it and it comes up.
Yeah, very cool. Makes a lot of sense. And that service is not terribly expensive for, the small business entrepreneur person. It's a lot cheaper than hiring a bookkeeper, actually. And you'll have all the proof of all your expenses, too.
Well, I hired the bookkeeper so I don't miss the deductions because I know that I'm missing plenty by not having her.
Yeah, but you're not your typical small business person. You're not a one woman show. You've got employees and independent contractors and staff and all that kind of
Small
stuff.
team behind me.
Yeah, so, you're a little bit more sophisticated, and I'm really kind of talking about the people who are just starting out here, or maybe they're not just starting out, but they're still really on the small side.
Yeah, but I still remember that, and I remember how much hanging onto those receipts sucked, and just trying to organize that. And
Yeah, for sure. Getting back to technology, it's amazing how many questions I get in a given day where I actually just turn to a search engine, I just turn to Google, and I type in the question, and I get the answer. Now, does that, is that like Googling how you're feeling every time you feel sick, and that's in lieu of going to the doctor?
WebMD.
Yeah, I don't think so. But if you do have a text question, oftentimes you can go ahead and stick that in a search engine, and you're going to get you're at least going to get pointed in the right direction towards getting an answer.
so number 4 on our list is a pretty good point. Find out if you have additional deductions you can take because of your job. You probably should elaborate on that one.
Yeah, for sure. I'll give you a couple examples. Job seeking expenses. So if you can document, what it costs you to get a new job. For example, if you had to fly someplace, I would suggest that plane ticket's probably going to be deductible, because if you had to fly in for an interview, I think most companies would probably pay for that plane ticket, but there's going to be incidental expenses with that trip as well. There's going to be hotel rooms and meals and things like that. Think about this, moving expenses. In particular for a new job. If you have to move, I believe it's over 50 miles away. I could be mistaken on that. But if you have to move to take a new job, then there's going to be some deductions available to you as well. And this is probably something that, this is something that gets abused a lot. So be careful here. And that's unreimbursed employee business expenses.
So what's an example for someone, they're a W-2 employee, they're having regular taxes taken out. They usually wouldn't have a whole lot of unreimbursed employee expenses. What's an example of what is?
I'll give you a classic example from my firm. I have an attorney that works with me, for me, and he gets a paycheck. But he goes to court like practically every day. And so he has to pay for parking, and he has to drive his own car to court because he's certainly not going to drive mine, and I'm not going to have a car service for him. So he's going to have some mileage down, from the office to the courthouse, 5 miles, 10 miles, whatever it is. And then he's going to have some parking expenses while he's there. Now, actually, he gets reimbursed for those things. He gets sort of an allowance for those things on a monthly basis.
But there's companies that don't.
But if he didn't have that allowance, then that would be an unreimbursed employee business expense. Another one would be sometimes employee uniforms are actually not provided by the business. It's required that you wear this, especially in like automotive, right? That's the thing that we think about. You go in to get your car service at the dealer. There's a service advisor named Bob.
Bob. I just had Bob in my mind, I swear.
And he's wearing this white shirt, and he's got a name tag that says Bob. Now, odds are the dealership did not pay for that shirt, and they don't pay for the laundry on the shirt, and things like that. But that uniform shirt is required. And so if he's paying for those, that would be an unreimbursed employee business expense.
So the laundering of it as well?
Potentially the dry cleaning could be deductible in that scenario. So you got to be careful, though, because unreimbursed employee business expenses go on Schedule A.
And if you have too much in a W-2, they're probably not going to like that.
Exactly.
Right?
And I see audits all the time where there's that saying, right? Pigs get fat and hogs get slaughtered. So be a pig. Don't be a hog. A hog in this example is, people just start claiming all kinds of things. And it's because they're using, guess what? Tax preparation software, doing their own return that has a running total of how big the refund is or how much money they owe. And so it encourages them to, fudge a little. And just be careful on that line. You're going to get whacked if you go over that line, you're going to get whacked. You're going to get audited.
You know what? It made me think of something that's so random and it's not exactly on point, but Florida Realtors and our local board, they have these things where continuing education, we have continuing education requirements, right? Different things we have to have, different designations you can get. And so they, a couple times, once or twice a year, will book a cruise and have dedicated hours that you have to do for your CE time. Isn't that cool, Pat? So I've never done it because I'm gosh, I love to cruise, but would that get flagged even though it's totally a business expense?
Now,
how much of that's expensible? If I'm hanging out with my peers drinking, is that expensible?
I'm not going to get into the details of how much I deducted, but there was a time several years ago, beyond the audit statute at this point, where I took 3 cruises in 3 months, and they were all for business. And actually, by the time...
Did you get flagged? There was no red flag hot topic?
Knock on wood, no.
Okay.
Now, I'll tell you what, though. After that 3rd cruise, I did not want to go back on another ship.
Pat's getting ready to go on a cruise, so he can relate.
1 cruise is cool. 3 in 3 months, way too many. And actually, one of them was really not fun because we literally spent the entire 8 hours a day in a conference room on the cruise ship. I mean, not my idea of a good time. It's rocking and rolling, and you're there talking about tax law. I mean, I can think of better venues. So the wife and kids had a good time.
The rest of it can be fun.
Yeah,
it was actually the ship was for 8 hours.
The ship was really nice, but it was just not my idea of a vacation.
No. Well, most of it is. But at least you can write it off. I mean, you can't write your cruise off any other time unless you're getting CE hours. So
Exactly.
So number 5 on our list is don't cheat on your taxes. Do we really have to say that? Don't cheat on your taxes.
I'm sure
that was directed at you, Pat.
I'm sure glad people do cheat on their taxes or would have to get a different job. But, you don't want to do that because, nowadays there's such sophisticated software and methods for the IRS to determine whether or not you're being less than truthful when you file your tax return. There's matching programs to where if you had, eBay, back to our example, you made $5,000 on eBay, there's going to be a 1099 there. You're going to want to make sure that shows up on your tax return somewhere. Otherwise, you're going to get audited.
We'll talk about some of those things when we come back, what is fudging too much? What is cheating? That's probably a good question, right on point. Don't you think, Darrin?
I'm going nowhere
hate
near.
my questions.
I'm going nowhere near what is cheating or how far can you go.
I'm going to make him talk about some stuff anyway. I'm your co-host, Katrina Madewell, for the IRS Solution Attorney Show. Keeping it fun. I'm keeping Mr. Darrin T. Mish from being boring, talking about IRS tax stuff. How am I doing back there, Pat?
You're doing good.
All right. Stick around. If you got a question, we'll answer it. 888-404-1010. 888-404-1010. Back in a minute. Welcome back. You're listening to the IRS Solution Attorney Show with Mr. Darrin T. Mish.
I'm digging the bumper music. Who is that?
That's my hubby's band.
Well, what's the name of the band?
Don Gates and Company. So he's the and company because he cannot sing. You would not want to hear him sing. Just saying.
Do they have a website or a CD or something?
I have no idea. Honey, that's for you. You can call in.
Oh,
888-404-1010.
killing me here. Trying to give them
I
a
know
plug.
April 15th they're doing a CD release party.
Oh, very
The
nice.
Brass Mug with a whole bunch of other bands. So.
The Brass Mug is where?
North Tampa. Like they moved it. It's not on Fletcher anymore. It's like by the Army Navy surplus store off of Skipper and Livingston Bears area.
So you can tell that this was not a planned, plug for the band, since she doesn't hardly knows the name, doesn't know if they have a website or where they can get the music.
Well, he's like, talk about it. Don't talk about it. I'm like, well, what do you want me to do?
Well, I like it, so I want to keep playing that.
You
Yeah.
had when the kids come. They tell me it's kid friendly. We'll see.
Yeah. We'll see. Lots of bars are kid friendly.
So, so just to wrap up our last thought, we were talking about don't cheat on taxes. And one of the things we talked about during the break, which is probably relevant, just to touch on really quick, is, you talked about writing off cruises and CE credits and stuff, but it's all relative. So if you're making $25,000 a year, you don't want to write off $5,000.
Right. We had I want to be clear on this. Okay. I'm not encouraging anybody to cheat on their taxes or take inappropriate deductions.
Number 5 was
okay?
don't.
Okay. Don't cheat. Don't take inappropriate deductions. But there's a different scenario if your business is a corporation and it's pulling $500,000 a year and you want to write off a $300 Coach briefcase, right? Which
Right.
would be a deductible expense. Or, if you're making $27,000 doing network marketing and you want to write off a $300 Coach briefcase, they're both probably deductible. But,
Pigs get fat, hogs get slaughtered.
yeah, exactly.
All right,
so you want to make sure that you're careful about those types of things.
We did get some questions, and we want to make sure we answer them. One of the questions we got is from Missy, and she says, on a past episode, you mentioned you had a client who hadn't filed a tax return in 20 years. You also mentioned that a client only had to file the last 5 years on back tax returns. Why not all 20 years?
Well, Missy, I just wanted to say it like that. I think it was actually more like 40 years that he hadn't filed. And actually, he had to file the last 6 years of tax returns, back tax returns. And the reason is the statute of limitations for the crime of failure to file is actually 6 years. And the IRS has a policy of not prosecuting people for failure to file tax returns if they go ahead and file just the past 6 years. I just had this issue kind of come up in an offer and compromise that I'm handling. I'm handling an offer, and we're kind of at not the preliminary stage, but at the stage where we just entered negotiations. And the offer examiner wanted my client to file some tax returns that were pretty old, like 2006, 7, and 8. And he had some deposits where he had made some estimated tax payments during those years. But when he came to me, I said, don't worry about those. You don't have to file those tax returns. And even this particular client was kind of skeptical about that. But when she called and asked me to ask my client to file those returns, I said, well, they're older than 6 years, so he really doesn't need to. And it was amazing. That issue just evaporated, almost as soon as I said that. And so it's not an issue in that case anymore.
And we had one more question from Darrin, and you can reach Darrin also at Darrin_Mish and 888-GET-MISH. You can ask your questions there too, and we may bring them on the air. But Jack wanted to know, can I claim my garage as a home office? I do have a desk in it, and I use it sometimes for client calls. Figured I would check with you first.
It's funny. The home office comes up over and over and over
we talk
again.
about
it
it
comes
regularly,
up all the time.
At least 2-3 times a month.
So, it has to be area in your home that's dedicated to business use. So, could you claim that your garage is a home office and get away with it because you have a desk in it? Maybe. But what you really want to do is you want to have photos of this area that you're claiming to demonstrate that it's primarily and actually solely for business use.
And I actually do have a home office, and I still don't write it off because I've heard about the red flag, so I just don't do it.
I'm not a big fan of it. I think it causes more questions.
It's probably not even worth the deduction sometimes.
Yeah, for most people, unless you have a really big house and you have a lot of square footage devoted to it. And then, then you have a bigger issue, and you probably have a higher chance of being audited. Jack, I'd say unless that garage pretty much only has a desk in it, I don't think I would claim it. Your garage probably has a car and, oil and paint and all that stuff that we all have, lawn equipment that we all
My
have in our
garage, you
garage.
can fit a car in there.
And I don't think I would take that home office deduction, Jack.
You're almost out of time for your train wreck of the week.
So we reached that time where it's the IRS
We reached it.
train wreck of the week. So this case, actually, I had forgotten all about this one, but this particular client, this lady, called today. This week, she had some other issue, and she said, "Yeah, you settled an offer for me," and I had this question, and I was like thinking, I was trying to remember the name, and I was scratching my head. I didn't remember anything about it. But then when I did the research in anticipation it might be a good train wreck story, I mean, it's actually amazing. It's absolutely astonishing. She's actually in Texas, and that's, I can represent clients in all 50 states, and I do, in fact. And she's in Texas. She owed $403,216.59. I'd have spotted her the 59
How's
cents.
that for exact math?
And we filed an offer in compromise. It took a while. It took a year or so to get worked out, and we ultimately settled that case for $41,563. So a little bit more than 10 cents on the dollar. I didn't do the math. It looks like probably 11 cents, 12 cents, something like that. And it worked out. And,
Even with 41 grand, they're usually making payments, right? They're not writing a check.
yeah, in this case, I can't recall if she paid that in a lump sum or if she paid that out over 2 years. But in some cases, you can go ahead and pay the offer price, the amount of the offer out over 2 years. We do so many low offers, low settlements, that it just makes sense to just pay it in cash.
Get rid of it. Yeah.
When the offer is a cash offer, it doesn't mean cash in advance, and it doesn't mean cash at the time that the offer is accepted. It means cash within 5 months of acceptance of the offer. Most offers are taken somewhere between a year and a year and a half to be decided upon, and so it's not as bad as it sounds.
So I want to tease your train wreck of the week. See, I did it that time. For next week, you had one that actually you got an offer in compromise, like a deal made, with the devil, the IRS, and they actually came back after him again. So tune in next week.
Yeah, that's a
9
good
a.m. for that
story.
show.
There was actually a check issued back to the taxpayer after that case was over. So yeah, tune in next week and we'll talk about that one on the IRS train wreck of the week.
What? Train wreck. So real quick headline story. IRS says scammers changing tactics again. What's that all about?
Well, there's something that happens where we're getting these calls virtually every week, and I've actually gotten these calls as well, where there's usually a voicemail left on your machine or your phone, and it's somebody threatening from the IRS, and they say, we're going to file a lawsuit and we're coming after you. And so you just have to be really watchful for that. The new scam is people are calling and saying that they're from the IRS, they have your tax return, and they just need to verify a few details to process it all the way. And, those details just happen to be your name, date of birth, and your social security number.
Everything someone needs to hijack your identity. Don't do it, people. Don't do it.
So listen, this is really important. The IRS is not going to call you to ask you personal questions.
And if you have any question or you're not sure, you can always call Darrin Mish at 888-GET-MISH. Thanks so much for joining us this week.
Websites, getirshelp.com.
This week, we're out.